Hello, welcome to this National Credit Union Administration webinar, Pathways to Consumer Financial Well-Being, the Importance of Financial Inclusion and Minority Depository Institutions, also known as MDIs. I'm Ken Worthy, Financial Literacy and Outreach Analyst with the Ncua's Office of Consumer Financial Protection. I will be your moderator for this broadcast. Before I introduce Ncua Chairman Rodney E. Hood for opening remarks, please follow along as I review the information on your screen for the best viewing experience. Please adjust the volume on your computer so that you can hear the webinar clearly. To increase the size of your slides, drag the bottom right corner of the presentation viewer. Please allow pop-ups from this site for it to function properly. Download the presentation by clicking on the PDF file under the Resource widget. Use the Ask a Question feature on the left side of your console at any time in order to ask a question. We hope to address these questions at the end of the webinar if time permits. This webinar will be closed captioned and available for on-demand viewing on ncua.gov in the coming weeks. And now, I'm pleased to welcome Ncua Chairman, the Honorable Rodney E. Hood, with his opening remarks.
Thank you very much, Ken. And thank you, ladies and gentlemen, for joining us for today's webinar to discuss the importance of minority depository institutions and the role they play in fostering financial inclusion. As the 11th Chairman of Ncua, I am excited to initiate the conversation and bring forth awareness on the necessity and sustainability of MDIs, as well as the necessity and importance of financial inclusion. Under the Federal Credit Union Act, credit unions were organized for the purpose of promoting thrift among its members and creating a source of credit for provident or productive purposes. Credit unions are member-owned and controlled, not-for-profit, cooperative financial institutions formed to give people access to affordable financial services as well as participate in their institution's governance. Credit unions have member owners who share the same association, community, or profession. Minority depository institutions, known as MDIs, serve the financial needs of racial minorities because traditional financial institutions have historically underserved these populations. Since joining Ncua, I have made financial inclusion a priority, not just at the agency, but also within the broader credit union industry. In my public remarks given around the country, I've talked to thousands of credit union leaders, employees, regulators, and member owners about the importance of financial equity and inclusion. Everywhere I go, ladies and gentlemen, I describe financial inclusion as indeed the civil rights issue of our time, and I am reassured that this message is very well received. That is why earlier this week, I announced the National Credit Union Administration's Financial Inclusion Initiative, known as Access, advancing communities through credit, education, stability, and support. This initiative will bring together leaders across Ncua to develop policies and programs in support of financial inclusion within the agency and, again, our broader credit union system. Access will build on the earlier successes, including our Second Chance Initiative, PALS 2 Rule, and MDI Preservation Program to expand and address the financial services, financial education, and employment needs of underserved and diverse communities. We will also continue to explore how can we be more inclusive of our military members and those in rural communities. I'm pleased with the credit union industry's leadership on this front and look forward to working with all of you in partnership in this effort. For me, and I certainly believe that it truly exemplifies the best of the credit union ethos and the best of our spirit of people helping people. In my efforts to continue this message, I continue to work closely with the Office of Consumer Financial Protection. OCFP works to support credit union efforts, raise consumer awareness of financial education and inclusion issues, and also increase access to affordable financial services. The Ncua serves in the Financial Literacy and Education Commission and supports implementation of the U.S. National Strategy on Financial Literacy, which includes addressing disparities in financial literacy among minority populations and other groups to promote broader financial inclusion and shared prosperity in the economy. OCFP worked closely with the U.S. Treasury Department, CFPB, and other agencies to bring greater focus on financial inclusion as a part of our collective federal efforts. Other priority areas of focus in the updated national strategy include housing counseling, saving for retirement, and investor education, as well as post-secondary education and military and veterans issues. All, as you can hear, issues we at Ncua and certainly the credit union industry are well positioned and poised to address head-on. As I conclude my remarks, I hope you find today's information enlightening, valuable, useful, and impactful. Do know that each and every one of you joining us today, you all have my commitment to ensure the longevity of MDIs with the goal of advancing and fostering financial inclusion and shared prosperity in our local communities. Again, thank you for joining us today, and now I'd like to turn the floor back over to Ken Worthy. Thank you all and welcome once again.
Thank you so much, Chairman Hood, for your opening remarks. Our program continues with remarks by Office of Consumer Financial Protection Director Matthew Bellaris and Office of Credit Union Resources and Expansion Director Martha Ninachuk. The directors will continue to outline the importance of financial inclusion and the role of credit unions, especially MDI credit unions, on improving access to underserved communities throughout the nation, as well as how the Ncua supports credit unions and consumers. After the directors, we will hear from 3 MDI credit union officials who will highlight specific products, services, and programs that help promote greater financial inclusion among their members and the communities they serve. You will hear from Felicia Lyles, the Senior Vice President of Retail Operations of Hope Federal Credit Union, based out of Jackson, Mississippi, and Abigail Cabello, Community Development Officer from Focus Federal Credit Union, located in Oklahoma City, Oklahoma, and Annalisa Elrod, Chief Operating Officer from U.S. Eagle Federal Credit Union, based out of Albuquerque, New Mexico. And then we will conclude with Sangeeta Maliandi from the Consumer Financial Protection Bureau, who will wrap up the presentations portion of this webinar by discussing what some of the research tells us about financial inclusion. And then we will take some of your questions. The views and opinions expressed are those of the presenters and do not reflect the official views of, nor should be considered an endorsement by, the National Credit Union Administration's Board of Directors, its management, or staff. And now, I introduce Director of the Office of Consumer Financial Protection, Matthew Bellaris. Director Bellaris?
Thank you, Ken, and thank you, Chairman Hood, for your opening remarks to help kick this event off. I also want to say a very special thank you to all who joined this webinar this afternoon, and to our credit union guests and our CFPB representative for lending their collective expertise on this important topic. Building on the Chairman's opening comments, I want to spend just a few minutes highlighting some national financial inclusion data and the role my office plays in supporting the efforts of credit unions and assisting consumers and communities with financial literacy and inclusion matters. Financial inclusion involves expanding access to safe and affordable financial services like savings, credit products, and financial counseling services. Such products and services are especially beneficial for unbanked and underserved people and communities, so they may more meaningfully participate in our economy. Research suggests that access to basic financial products and services have significant long-term impacts on consumers and communities in which they are offered. For example, Geographic location of credit union branches are intricate to the access of financial services or products consumers will use. As such, credit unions often place a considerable percentage of branches in low and moderate income areas, which in turn promote financial inclusion. In addition to location of branches, research demonstrates how technological innovations also play a major role in boosting financial inclusion. In fact, many credit unions offer membership enrollment, savings options, and loan products with the click of a button online. When included in the financial marketplace, consumers are ultimately more empowered to save emergency funds, build credit, finance a home, and avoid common frauds and schemes. Consumers who have access to these financial services can benefit from long-term financial well-being by making informed financial choices that provide more opportunities to build wealth. And I just want to quickly reiterate Mr. Hood, Chairman Hood's point he made about Ncua participating in the Financial Literacy and Education Commission. It is an interagency group created by Congress to improve the nation's financial literacy and education and helps ensure consistency and coordination of efforts across all the agencies. He mentioned the release of the national strategy, which I just want to kind of highlight a couple points in here on this slide and provide you with a link. There is a link to this on ncua.gov. This enhanced focus on financial inclusion is important because we are aware that major gaps exist in the availability of safe, secure, and affordable financial products and services, especially among traditionally underserved minority communities. According to federal survey data, rates of unbanked consumers were higher than minority households. The effects of participating fully in the financial marketplace persist over time and can have truly positive consequences. For example, financial inclusion is particularly important as a means to minimize the wealth gap. Data reported by the Federal Reserve just last month indicates the median wealth for Black families is just $24,100. For Hispanic families, median wealth is $36,100 as compared to $188,200 in wealth for white families. This gap leaves many minorities at an economic disadvantage, and the lack of financial access contributes to the gap. The use of high-cost or potentially predatory financial services to conduct financial transactions, such as check cashing services, money orders, and prepaid cards, may also be a contributing factor to this gap. Increasing awareness and boosting financial inclusion can lead to meaningful benefits for minorities and underserved communities. MDIs and credit unions alike have created a space to foster financial inclusion. Now let me spend a little bit of time to talk about the role of credit unions and my office as it relates to financial inclusion. As Chairman Hood indicated earlier, under the Federal Credit Union Act, credit unions were organized for the purpose of promoting thrift among its members and creating a source of credit for provident or productive purposes. While credit unions serve the needs of their members and promote financial literacy within the communities they serve, my office works to reinforce credit union efforts, raise consumer awareness, and increase access to credit union services. For example, my office worked with the Ncua board to expand access to payday alternative loans, or PALs, which include built-in consumer protections and are much lower in cost than other comparable short-term loan products. We also have a division devoted to ensuring and assisting credit unions with compliance of federal consumer financial protection laws and regulations. My office also supports the agency's financial literacy and consumer financial protection website, mycreditunion.gov, which is also available in Spanish at espanol.mycreditunion.gov. Credit unions use the information and learning tools on mycreditunion.gov to provide their members and others within their community with helpful tips on federally insured savings, debt management, steps to buying a home, credit reports and scores, and to learn more about credit unions in general. We also manage the Ncua Consumer Assistance Center, which takes inquiries and other concerns from consumers, and helps them work with their credit union to achieve financial success. And as I indicated earlier, we are members through Ncua Chairman Rodney Hood of the Financial Literacy and Education Commission, which is solely dedicated to addressing the financial inclusion issues of our nation. I look forward to the continued focus on financial inclusion this afternoon. And with that, I'll turn things back over to Ken to introduce our next speaker.
Thank you, Director Bolaris. And now, Director of the Office of Credit Union Resources and Expansion, Martha Ninachuk. Director?
Thank you, Ken, and thank you, everybody. This is such an important initiative for all of us, and I really appreciate the opportunity to present in front of you now. My time with you is really to provide you an overview of the NCUA's Office of Credit Union Resources and Expansion, known as CURE, and the variety of resources we offer to support credit union efforts as they serve their members and communities. CURE particularly supports credit unions that are low-income designated and those that are minority depository institutions, also known as MDIs. A credit union with a low-income designation has a majority of members who are low-income individuals, and to qualify as an MDI, a federally insured credit union must have a majority of its current members, a majority of its board of directors, and a majority of the community it services comprised of individuals within any of the 5 eligible minority groups. And those are Black American, Native American, Hispanic American, Asian American, or multiracial American. Through CURE, a credit union may receive training or receive approval to expand to underserved areas. Credit unions that meet specific program requirements may apply for grants or loan funding through our Community Development Revolving Loan Fund. They must also have the low-income designation, or our office provides the low-income designation, or participate in programs designed specifically for MDIs. This office also assists organizers of new credit unions. Recently, the NCUA has experienced an increase in inquiries regarding MDI credit unions. So the next couple minutes, I'd like to spend discussing these credit unions with you. As of June 30th, 2020, there were 509 such credit unions located throughout the United States. They serve 3.8 million members who hold almost $44 billion in deposits. Our analysis at year-end 2019 showed 80% of MDIs have less than $50 million in total assets. 79% of MDI credit unions also had the low-income designation, and the substantial majority of MDIs are Black and Hispanic American. Many inquiries we receive request guidance on how to identify an MDI, and CURE publishes a list of federally insured MDI credit unions on the NCUA website quarterly. You may obtain the list by typing MDI Preservation Program and the keyword search. From the list, you may identify MDI credit unions located near you and contact them to determine if you are eligible or if any of your members or inquiries that you receive are eligible to become a member of the credit union. If you are a manager, director, or volunteer of a federally insured credit union and you believe it meets the requirements to be an MDI, please read our fact sheet, which we've compiled. It's called Minority Depository Institutions. It explains how such a credit union may self-designate through the online credit union profile, and the fact sheet is, again, available on the NCUA website by typing MDI Preservation Program. If your credit union is already an MDI, we encourage you to confirm its status by completing the Minority Depository Questions section of the credit union profile at least annually. CURE is here to assist credit unions in their expansion and outreach efforts. We truly are a customer service-oriented part of the agency, so please take advantage of this very useful resource to you. If you want to contact our office or have additional questions, just email us at curemail@ncua.gov. And at this time, Ken, I'd like to turn it back to you.
Thank you, Director Ninachuk. And a reminder to all participants, if you have any questions, all of our audience, if you have any questions, please be sure to type them into the Ask a Question box on the console window. And we hope to get to those questions towards the end of the broadcast. And now I'll transition to Annalisa Elrod with U.S. Eagle Federal Credit Union. Ms. Elrod will kick off our credit union MDI panel and discuss her credit union's approach to defining, serving, and conducting outreach to reach the underserved. Ms. Elrod?
Thank you, Ken, and thank you everyone joining today. I am thrilled to be able to talk about it. This has been a fairly significant initiative. I was blessed to join U.S. Eagle in 2016 from another credit union, and was, again, very fortunate to have a mentor and a CEO who is a 30-year, long-time, passionate advocate for underserved. We actually have a program called Moms, so I will just a little bit about us before I go into the details. We're $1.2 billion in assets. We have about 81,000 members and 8 locations throughout northern New Mexico. If you're not familiar with New Mexico, we have the I guess the achievement of placing anywhere from 48 through 50th in a number of poverty, education, food insecurity stats. So we definitely have, I think, a greater calling even than other credit unions may have in terms of serving the underserved. So what I'm going to focus on in my time, and I know Felicia and Abigail, which will follow me, have some great examples of specific programs and some case studies, so I will leave that to them. What I'm really going to focus on is how you define who your underserved market is. The secret sauce is that there is really no universal definition for what underserved, underbanked, or minority is. I have a career and background in marketing, so we really took a classic marketing approach to this by defining who that target market is. There's a score of options that any credit union can use. English is a second language, ethnicity, education, minority. We are a minority majority state and have been for about 20 years, so that wasn't very helpful for us in our case. And what we finally really landed on is household and individual income. There are no poverty thresholds by the census, and I should actually back up just real quick. We use publicly available data in terms of really figuring out who we wanted to target. So FDIC and Ncua both have really extensive data that we took advantage of, and we also use the U.S. Census Bureau. So what we actually came up with for our term, and I think I mentioned Moms, Members of Modest Means, is a program name that has a lot of resonance within our credit union because they've been using it for a number of years. So we really wanted to define what that meant. And what we settled on really was 80% or lower than the median household income and individual income, respectively. So that's something that worked for us, but not to say it will work for your credit union. So really, I would advise spending some time to figure out what the individual needs for your communities are, and utilizing, again, not only that public research, we actually used a lot of our community partners as well to really get a better handle on what the right metrics were to use for our program. And so once you define that target market, you can really figure out from a quantifiable rather than a qualifiable metric how you're doing. So you can say, and I'm sure all of you out there probably have a wide variety of programs. And if you look at them, people will say they're all really good, but in terms of metrics, in terms of how many people are actually utilizing this, how sustainable the program is, you really can't define and share with both your board, with your employees, and with your communities, which is really important if you want to get grants or funds to help your efforts. You really need those quantifiable metrics. They're also very valuable if you use any kind of automated marketing system, which we do. So once you plug those definitions in, you can very quickly and effectively target certain programs to those members and prospective members if you have an automated marketing system. So We've got data that can be tracked. We started out slightly under 25% and are now a little bit over 25% in terms of our membership. Doesn't sound very effective, but we are in a period of fairly rapid growth. So the fact that as we grow, at least 1/4 of those folks that join us fitting the criteria of not really being able to access mainstream financial services. It also determines our reach and examination of additional market opportunities. Once you have that definition, you can reach out, as I mentioned, to other partners and say, we're really looking to help in this and people that fit this criteria. And we utilize some of that actually for a program we're doing now. It's called CU Safe. I'm a little ahead of the gun in terms of talking about products, but it's actually about domestic abuse and ending that cycle and providing loans to those people in that program. And we partnered with a community partner, Domestic Violence Resource Center, to identify those folks. And without some of that criteria, we might not have been as effective. So really, the understanding, once you have that metric, you can then weigh how successful you are against that metric. And on this slide, I also have ROI. I want to highlight that ROI is not a dirty word in terms of sustainability, because our goal is to help as many people as possible while still ensuring the best health for the organization long term. What has helped is when we stop talking about annual income and start talking about life of the member or life of the customer, depending on what term you use. And that really then focuses on helping folks accumulate wealth, diversify their financial portfolio, and really become successful members in their own right. So offerings. I mentioned CU Safe right up front. We also have Credit Builder credit cards for folks who don't traditionally qualify for credit cards. We have 2 types of loans. The relief loan is meant for folks who have been impacted. We have a very high percentage of government employment. So every time there's a furlough, we unwrap and offer that relief loan. And it's at 0%, and they have 24 months to repay that. Same with success loans. The success loan is given after a member's been with us for 2 and 5 years with different amounts, and it's just a line of credit. So it's basically rewarding them for their good behavior with us and allows them access to capital that they may not otherwise be qualified for. Huge with us is financial literacy programs. We do partner with external partners. If you're familiar with the name EverFi, they have a very, very easy to digest, self-paced online financial literacy program, which has been extremely successful, not only with our underserved folks, but really even folks with credit problems, all of our membership all over. And we actually increased financial literacy use. I believe it was over 300% when we rolled this out. And Bonsai is what we use for our youth. We have a flex checking, which is really a second chance checking account. And we do have a number of community engagement programs having our members vote and participate in the money that we give out. So we do have financial giving that, like most credit unions do, but we believe strongly that our members should be involved in that. And you can see an example here in the next one, that in Rich Ed with the girl with the mask in the picture. We gave away $10,000 this year to classrooms, and teachers applied for grants with an emphasis again on underserved and also tech. So if they're leveraging technology, they get extra bonus points and an extra edge up in terms of our ability to award that program. And the simple, surprising, realistic help is really explaining our financial literacy. We promote that actually throughout the community, and you don't necessarily have to be a member to take advantage of it. And finally, how do we reach these folks? I mentioned we do have an automated marketing program, which gives us a great boost, but it starts always with budget in terms of how much money we're looking at doing CDA accounts and are developing that. We also have a flight crew, which is a subcomponent of our employees. which decide, and we give them a budget every year, and they decide which partners in the community we want to help. So that's a great way to get your employees engaged, and we've received very good engagement results from that, and satisfaction lifts. So if you were looking also to get your employees more engaged and satisfied, it's great to get them involved in your community giving and community support. We do a large amount of digital, geofencing, mobile, social media, also do direct mailings occasionally. They tend to be higher cost, but there is a smaller, I don't know if you've seen this lately, but most everyone who comes into our offices has a smartphone, regardless of how much money they make. So we've really allocated most of our funds towards digital because it's more cost effective. But again, we have, as I mentioned, flight crew. We do financial literacy presentations around the state. Again, folks do not have to be members. We partner with classrooms and really work towards really some of those more marginal income classrooms to really make sure that folks at least have exposure to financial literacy. And I think that's it. I will turn it back to you, Ken. Thank you.
Thank you, Ms. Elrod. That was a great presentation, a lot of really insightful information. And just a reminder, if you have questions, some of them are coming in. We're going to get to them towards the end of the broadcast. So please continue to submit your questions. Be sure to type them in the Ask a Question feature on the console window. Now let's transition to Ms. Felicia Lyles with Hope Federal Credit Union, who will share her credit union's underserved outreach efforts and also a couple of heartwarming stories about how impactful this type of work is to individuals and families. Ms. Lyles?
Hello, thank you, Ken, and thank you everyone that is participating in the webcast today. Just having this opportunity to talk about the work that Hope is doing. When I think about financial inclusion, you know, that is the very reason that Hope is in existence today, because we feel that, you know, regardless of where people live, their gender, race, or place of birth, that everyone has the right to have access to affordable financial services and have the opportunity to support their families. And so over 26 years, you know, Hope has generated over $2.5 billion in financing that has benefited more than 1.5 million people in one of the nation's most impoverished regions in the Deep South. And so you see the makeup of, you know, when you think about Alabama, Arkansas, Louisiana, and Tennessee. And so, but also in these places, you often find not just financial deserts, they're bank deserts, food deserts, and opportunity deserts, particularly around employment opportunities as well as the performance of the schools that's in these communities. So we recognize how critical and necessary financial services are to close those gaps. So we bring people into the financial system by providing them access to affordable tools and resources, and we believe we achieve this and have impact by meeting people where they are and really designing a plan that's based on what works for them. And so the next slide you see just gives an overview of Hope's retail financial services. Our products, we are intentionally designed to advance economic opportunity by closing these financial service gaps, but also facilitating investment in underserved communities. And so we feel like the activities that we do daily help pave mobility pathways in places that typically are characterized by generational poverty. So if you look at the slide, it gives an overview of the number of people served, number of consumer loans, and the dollar amount of consumer loans since Hope's existence. But then also you look at the member characteristics. And when we think about a breakdown, when we talk about unbanked, underbanked, underserved, 33% of Hope members were unbanked prior to joining Hope, and then 28% were underbanked. And so while many banks are consolidating and eliminating their free checking and savings account, Hope continues to expand its free services and customize its products to increase the number of bank low-income people in our region. And when we look at the makeup, 2 out of 3 of these individuals are also a single female-headed household, which is another predictor of poverty. And so on the next slide, it shares a story of one of our members when she found herself, our typical member, got divorced, mother of two, living paycheck to paycheck, and something basic as just needing a emergency car repair to get her to work. And so went to your traditional bank, got turned down, heard an ad on the radio about Hope, and so she came to visit the branch. And really the commercial that she heard was really around come let us talk to you on how you can, improve your credit, how you can improve your financial situation. So she really came to Hope to get credit counseling. But she left Hope with not just the credit counseling, which is the financial education is something that we provide to individuals. They don't have to be a member of the credit union, as well as we provide financial education to groups and organizations, employer groups, churches, and that's something that we just do as a service in the communities. But she not only left with the financial education, but she left with a loan where we were able to pay off that payday lender, which also in the Deep South is something that every corner in the communities that we're in, you may not see a bank, but you see a payday lender. And so we were able to give her a loan to get her out of that situation. And this is a story that we typically hear. We've developed a product about 5 years ago called the Borrow and Save Loan. And so this loan gives our borrowers an opportunity to build credit, but also to help strengthen their financial health simultaneously as well. So when that borrower takes out the loan, we put half of the funds into a savings account, and then the other half does go to pay off that high-cost debt, or it may be just another emergency need that they may have. And versus as the payday loan, where it's having to be paid back, within 2 weeks or within a small short term, they're able to pay that loan back to us over a 6-month or 12-month repayment term, depending on the type of loan that they were able to get. And so the next screen, it shows again just you see the products and services and the development tools that we've put in place, particularly you have around the banking, the unbanked, and the underbanked, but also products that we've developed around home ownership and affordable housing, community building and advocacy, as well as support for underserved entrepreneurs. So when we look at our consumer loans that we offer, Hope does not rely solely on credit scores to make our decisions, because most of our members have low credit scores and in some cases lack credit history entirely. So instead, our underwriters, we use non-traditional methods to help us make decisions, so such as our 12-month rent history. If they do have a banking relationship, we use those bank statements. We use utility bills. We use cell phone bills, cable bill, and other bills that where they can show some type of repayment history. And then in line with our underserved entrepreneurs, Hope, earlier this year, we rolled out our small business program so that we can enhance our loan products, but also an opportunity for us to enhance our lending products as well. And so we recognize that entrepreneurs of color have difficulty accessing credit. So the median loan amount for Black businesses is $25,000, which is less than half of the median loan amount extended to whites at $58,000. So as a result, Hope is intentional in its practice to expand access to businesses owned by people of color. And the next slide here, you see, this just shows you our footprint. When you look at where Hope is at. Hope serves 5 states in the Deep South, where more than 1/3 of the nation's persistent poverty counties are located. And you see, we call these our financial inclusion offices. And so residents in our target market, again, Alabama, Arkansas, Louisiana, Mississippi, and Tennessee, they experience some of the worst unemployment, poverty, and access to financial services and capital in the nation. So one program, for example, that we were able to implement even in response to the pandemic was a Power of Hope loan. And so the Power of Hope loan, this was an opportunity for us to help families with some of their essential needs, food, shelter, healthcare costs, and these were targeted individuals and our members that were prioritized for members that income fell below the federal poverty threshold, but also for those individuals that did not receive any federal stimulus support, specifically Hispanic immigrants, because if you did not have a Social Security number, you were not eligible for economic impact payments and unemployment benefits. So being able to develop those type of products in response to the community needs and being able to, and we continue to put those resources in the hands of those individuals right now that have needs. And the last story I'm going to wrap up with, I talked about the home ownership as one of our products. We recognize home ownership is crucial to wealth building. And so you see the example here of Mr. Johnson and his wife and their children. Mr. Johnson was a police officer, Cassandra school teacher, built their careers in serving others. But when they were ready to purchase a home for themselves and their children, they didn't have the down payment to support that. And so the traditional lenders would not give them a loan. And so Hope partnered with Wells Fargo Neighborhood Lift program, and we were able to make their dream a reality. And we were able to provide them with a $10,000 down payment assistance. And so more than 80% of Hope's mortgages extend the American dream to first-time homeowners. So Hope's mortgage loan solutions are designed specifically for low and moderate income families, including people with credit scores as low as 580. And so as part of our mission, Hope serves people who often can't get loans at other institutions or would get much higher rates at predatory or subprime loan companies. So this is just another example of many of how Hope is very intentional on our approach to close the financial gap and to ensure that everyone has access to affordable financial services. And so at this time, I'm going to hand it back over to Ken. Thank you.
Thank you, Ms. Lyles. You're certainly, Hope is very busy doing all that great work, and we thank you for sharing that information with us. And now we're going to go ahead and transition to Ms. Abigail Cabello with Focus Federal Credit Union. Ms. Cabello will share her credit union's efforts, including some of the innovative financial services they're implementing at Focus, and she'll highlight some of the local collaborations that she's built as well to support financial inclusion. Ms. Cabello?
Thank you, Ken, and thank you for allowing us to be part of this webinar today. We are very passionate here at Focus FCU about serving our underserved communities, which is why in 2016 we sought out and applied for the Community Development Financial Institution Program and received a $2 million grant from the U.S. Treasury to help us expand loans to those of low to modest means. And this kind of took us into this new journey where we were looking into products and services that were innovative, that were really going to cater to these communities and really help them get back on their feet financially. I think we all agree that we need to be able to use all the products and services that we have and give them as resources to these communities so they can be financially successful. We were chartered in 1955, so we've now been around for 65 years, and we've really always had a focus on our community. We're really proud of that. And then in Oklahoma City, the most significantly distressed families are centralized in what was formerly designated as the Oklahoma City Empowerment Zone. So Oklahoma City has the highest concentration of unbanked and underbanked consumers in the state of Oklahoma. This number includes Hispanic, African American, and Native American minority groups. The largest need continues to be household stabilization, which includes financial literacy and the ability to access the tools and resources, like I said, they need to be financially successful. We've partnered with various non-for-profit groups in these areas, and these groups really help us reach the underserved and unbanked and offer them the products and services we have developed to help them get back on their feet financially. Our Fresh Start program is one of these products. Let's kind of look at the metrics to try to, so you have a better handle of how we're reaching out to these underserved communities. We launched a Fresh Start auto loan, Fresh Start signature loan, savings product, and a Fresh Start checking account and alternative checking account to help these communities. Our community initiatives over the past few years have been on the loan side with loan growth in the 7 to 10% range. Financial literacy and inclusion are paramount to see financial stability in the underserved areas. And we're going to go over in more detail what our Fresh Start program looks like and how it really helps these communities. The Fresh Start Auto Loan was created to help our members get a traditional loan with lower interest rates and lower payments. With good pay history, they can refinance at an even lower rate in as little as 6 months. We love this product because, as you know, for families to get back on their feet and to continue to have employment, they need transportation. They need to be able to get there. So we saw over and over members come in and just not be in the place they needed to get transportation, and then they couldn't get a job, and then they can't pay their bills. So this is a great way, we feel, to be able to give them what they need to get back on their feet. The Fresh Start personal loan is a payday loan alternative. Like Felicia was kind of saying, we have a payday lender on every corner here, and it's really big down here in the South. And we just wanted to be able to get our members out of these vicious payday loan cycles that they seem to get into over and over. The terms are 6 to 12 months. To spread out their payments and get back on their feet financially. What we want to do is offer them the financial coaching that they need so they can get away from these payday lenders and get out of that vicious payday loan cycle. The Fresh Start checking account was created for anybody that might have charge-offs and would not otherwise be eligible for a checking account. Checking accounts are imperative for our members who are struggling and need a more cost-effective way to pay their bills. Again, they need to have a way to cost-effectively pay their bills without having to go get cash or a reloadable Visa. This helps them get back on their feet. And then, of course, we have an alternative checking account for anyone who does not qualify for a Fresh Start checking account. This is basically a reloadable Visa. And this account gives our members a debit card and an opportunity to open a Fresh Start checking after 6 months of good pay history. With all of these products, what's really great about them is they all come with personal financial coaching. You develop that personal relationship with your financial service representative. And I think that's a big part of getting back on your feet, is knowing that you have the support you need to be financially successful. And we want to give them all the tools that they need to be able to do that. And that includes a financial coach. So it's somebody that they can call when they feel like they have questions, and also, financial coaching on their credit. A lot of them just don't have access or the education to even know how to build a good credit score, and we want to give them those tools and resources that they need. So this is a great program for our members to be able to get back on our feet, and this is something that we can offer our partners in our collaborative relationships. Some of our collaborative relationships include the YWCA, Sunbeam Family Services, Remerge, and the Center for Employment Opportunities. For the YWCA, we have partnered with them for their economic development program at Palomar, Oklahoma City's Family Justice Center. We're really proud of this partnership because this really helps us get this information and these resources out to their clients so they can get back on their feet. Sunbeam, we offer them financial literacy classes, not only for their employees, but also for their families that they serve in these underserved communities. We think it's very important. Remerge, we also offer financial literacy classes to them. And with each of these partnerships comes this relationship building aspect where we're a good contact for them. We always want to make sure that we are a resource for them for whatever they might need and whatever programs we can create for them and their clients. If you've never heard of CEO, the program at CEO helps recently incarcerated individuals, and it gives them the opportunity to get a job through numerous employers, through CEO, and give them a steady paycheck. What we do is offer them financial literacy classes, and we also give them a coupon to waive the fee upon completion of the class. We think it's really important that this is also affordable for them. Because as you know, when you've just been recently incarcerated, you don't have any money, but you do have a lot of debt. So we want to make sure that we're reversing this vicious cycle and that we're getting them back on their feet. So with some of our digital product and service innovations, we feel like, as you guys know, COVID-19 has just sped up the process and the need for technology. So we've decided our financial literacy videos can be found on YouTube as well as our social media platforms. We want to make sure that that's accessible to everyone. We also offer an ebook free to our members focusing on financial solutions during the coronavirus pandemic. We are also working on an on-demand seminar that we can utilize to still offer financial literacy to our partners virtually during the pandemic. COVID has reinforced the need to ensure digital services are innovative and robust. With COVID, a lot of us had to close our lobbies. And so we had to do a lot of our business over the phone through digital services and drive-thrus. We have actually seen a lot of success with this, and our members continue to utilize our digital services and lean on those products that we have to offer. I believe on the other side of COVID, we will learn improved ways to serve members with better efficiency through the organization. In addition, we have been working with members who are struggling due to job loss by offering loan extensions and low-cost hardship loans to help fill their financial gaps. I think it's very important that we be here and we work with our members that need to get back on their feet. With that, I'm going to hand it back over to Ken, and I thank you guys again for this time.
Thank you so much, Ms. Fellow. That was some really great information. When you're having fun, time flies. We're running out of time on this broadcast, so let me hand it over to Sangeeta Malayandi, who's going to wrap up our presentation portion so we can take maybe a couple of questions. Sangeeta?
Great. Thank you, Ken. First, thank you to our hosts and colleagues at the Ncua for organizing this webinar. Also, a very special thank you to the panelists for sharing their experiences today. Every opportunity to hear from people doing this work on the ground is invaluable to understanding and solving the issues we know exist. So I really appreciate it, and the Bureau appreciates the opportunity to be here and hear from all of you today. It looks like there's a little background noise. So I wanted to spend a minute. I don't want to redefine what we've learned about financial inclusion. So I really wanted to put it into a little bit of context on financial inclusion, which the CFPB sees as our work in improving the availability, access, and education to help people navigate the financial marketplace, and more importantly and simply to do this for everyone and with dignity is what we like to sort of frame it. And to expand on some of the statistics that we heard today from Chairman Hood and some of the earlier presenters, we know that these contrasts in financial inclusion by race have real consequences. From the Bureau's research ourselves, we know that racial and ethnic minority populations are more likely to be credit invisible, meaning they don't have a credit score or limited credit history to generate a score. And we know how important credit history is for all the important financial and life decisions that people make, such as employment, housing, and loans, and what that means to not have adequate access to credit for minority populations and limitations they face in wealth building and other opportunities that we heard from some of our presenters today. Another thing that some of the presenters touched on is around the outreach and communication and really a level of confidence, which is also important to financial health and the ability for people to navigate their finances, not just to make good decisions, but particularly also make their way out of any financial missteps that we all as humans can make. And so a lot of the research from the Federal Reserve shows that minority consumers are less confident in their financial decision making, and we know that can impact their financial choices. And the last bullet is just to emphasize the real impacts of financial inclusion, especially for young people. And without the access to financial marketplace, young minority consumers can be out of reach of pursuing higher education. And we know that higher education is associated with higher income potential and better financial outcomes. I just wanted to highlight a few tools to help address some of financial inclusion issues from the Bureau. It was really great to hear that all the presenters and all the financial credit unions that presented today are using financial education. We continually hear the importance of trusted and unbiased sources for financial information, and we have, and you can find on our website, a very wide array of resources that financial institutions and other community partners have been using the Bureau to help in some of their programmatic work. And it was really nice also to hear about some of the innovative products and services. To complement some of the work that practitioners are doing on the ground, the Bureau actually has done some rigorous evaluations both on credit builder loans as well as financial coaching. You can find both of those reports to kind of help you design or understand your programming on our Bureau website. And I just want to highlight and validate some of the points made earlier on the importance of getting to know your audience. We've done a lot of work on engagement in understanding engagement, specifically around hard-to-reach populations, so those that are facing any additional linguistic or digital barriers in reaching those populations as part of your overall strategy. So thank you to all of you for presenting. Really appreciate hearing all of that, and reach out if you have any questions about the Bureau's work or any of our resources. Thank you, Ken.
Thank you so much, Sangeeta. Sorry for the rushed pace. We want to get some questions in, but thank you so much for that great information. And we'll make sure you download the slide deck. You'll have Sangeeta's information in there. You can reach out to her directly, or you can reach out to our office, which will share some contact information in a bit. But let's go ahead and get to all these great questions we have coming in. To the entire credit union panel, we have a question about how your credit union handles compliance risk, offering the types of products and services that you outlined, and to those who might not qualify. Can any of you, to the entire panel, whoever wants to chime in, perhaps we can start with Ms. Alrod?
Sure, happy to do so. Compliance is a pretty important part of any initiative, and so we make sure they're there on the ground floor. In terms of our products, we have reduced requirements or don't even bring in the credit score. We also have products for folks who may not have a permanent place of residence yet, so we've also worked with our Ncua examiners to make sure that they're okay with housing shelters if needed in terms of having a permanent location and being able to open deposit accounts for them. So that's my 2 cents, is just make sure you get compliance in on the ground floor and work with your auditors as well.
Thank you. Any of the others panelists would like to chime in?
Hey,
okay, then we'll move in. Oh, sorry, go ahead.
No, this is Felicia with Hope. I was just going to agree with her. I mean, the main thing is when we have these products and solutions that we're looking to offer, just always including compliance in that conversation. But we can go to the next question.
Thank you so much, Felicia. We're gonna run a little bit over here, a couple minutes, so that we can just answer a couple more questions. We have another question about youth financial inclusion, which is great. Are any of the credit union panelists utilizing non-custodial youth accounts to help with financial inclusion and wealth building activities? To the panel. Anyone can jump in on that one?
Hey, this is Felicia, and hopefully this answers the question. That is one thing for Hope that we've really invested a lot in, is in our youth. Actually, we have a credit union that's in a local high school here in Jackson, and the reason is because when I talked about kind of the communities and the data around unbanked and the underbanked, typically those students, their parents don't have accounts. So being able to have our credit union in one of the local high schools in one of the areas that we know is impacted has been tremendous as far as giving them access to start accounts. But then also we do a lot of youth asset development accounts with where we have funders or organizations that provide seed money or initial deposits to get accounts open for students or for children, 3 and 4 year olds. Particularly, we work with a low-income housing complex that they actually seeded these some of the children, the residents, with an initial deposit just to start savings accounts, because we know the data shows that children that have a savings account are more likely to go to college as well as more likely to graduate from college. So those are just a couple of examples of some of the work that we're doing with youth.
And this is Annalisa. I just want to say we're still in our infancy in terms of youth products, but we do have a junior board of directors, which is high school and very early college folks. Which we do use to make sure that everything we're offering is relevant and has I think sometimes that perspective that we're missing in terms of our product development. So,
wonderful. Thank you both for those answers. Question about how you use technology and how do you measure engagement and growth, and how you feel technology is going to be evolving over the years is going to evolve. How are you going to use technology over the next several years to promote greater financial inclusion? Sorry about that, I got it out, but anybody please chime in on that.
Yes, this is Abigail. I think it's really going to move to, when it comes to financial education and getting these resources out to our underserved communities, it's going to come down to going virtual. I think Felicia was kind of talking about, everyone that you see, no matter what their income is, everybody's got a smartphone. So getting the information out to them in that way is going to be really important in the years to come, and being able to utilize things like Zoom and YouTube and social media platforms to be able to give that financial education out to them virtually. I think that's going to be important.
Excellent. Any other panelists like to chime in on that one?
This is Annalisa. I've got a bit of a slightly different twist, because I talked significantly about technology in my presentation, but we're also using technology with vendors. We're partnering with a group called Open Lending, which will allow us to lend deeper than we historically have been comfortable with. And it integrates right within our loan origination system and takes less than 2 seconds to decide. So those kinds of behind-the-scenes technology support are equally as important as the technology we use with both our members and to reach our members.
Excellent. Well, we've run out of time, so if you have any questions for our panelists, we're going to share our contact information here on the next slide, and we're going to wrap up with the Office of Consumer Financial Protection Director, Matt Bellaris, who's going to give our closing remarks, and then we'll share our contact information. Please reach out via that contact information, and we can follow up with the questions that you've submitted. Director Bellaris?
Thank you, Ken. And once again, thank you to everyone who joined us this afternoon, and a special thanks to our esteemed guest speakers from the credit union community and the Consumer Financial Protection Bureau. We hope you found this information helpful. Please contact NCUA's Office of Consumer Financial Protection or the CURE office with any additional questions, comments, or concerns. And also be sure to visit mycreditunion.gov to access and provide your members with NCUA's financial literacy resources. And Ken, I'll turn it back to you.
Thank you, Matt. This webinar will be closed captioned and available for on-demand viewing on ncua.gov in the coming weeks. Thank you all for tuning in. This concludes our broadcast.